Welcome back to Markets. Today, it's the first day of December. A happy new month to you. What are your financial/investment goals for this particular month? Or will you be spending some time evaluating how the year has been and possibly preparing for next year? We will be of help for that and more, but just keep it here. But today, we want to look at the economy of Kenya. How far have we come? What are we doing? And our key topic for today is a pending debt crisis. In other words, are we in such a bad space that we possibly couldn't get out? Well, for starts, Ken tells us that we are paying 58% of our revenues this year into debt, and a larger portion of that is going to pay external debt. Now, let's continue this conversation. We are joined in studio by Mr. Ken Kishinga, who is the chief economist at Mentoria Economist, and he is joining us virtually. Sorry about that. It's Mentoria. I was about to slide in between those particular words from where I come from, but that's on a light note. So, Ken, 58% of our revenues are going into debt. What has been the case? How did we get here?
Well, I think the big infrastructure projects took us here very quickly.
Okay.
The Eurobonds got us here very
quickly. All right.
Because we were at about 1.8 trillion when the Jubilee administration came into power. We are into the 7 trillion.
Yes, slightly above 7 trillion.
Above that. So we are
and targeting 9 trillion before next year.
So that's a fourfold increase. And if you look at the big projects, yes, we've seen construction. Every road in Nairobi is under construction.
Okay.
But for me, again, when I talk about that, I ask ourselves, fiscal policy, the big infrastructure projects are underpinned on the fact that people have money to do business. So people are traveling. But when your monetary policy is not working, when people don't have money, people will not use those roads, people will not use those railways, people will not travel because there is no business to conduct. So for me, it's really returning the country to look at the central bank. How do we pump in more liquidity? And I've written extensively about stimulus. Can we get monetary stimulus, not the fiscal stimulus that we've seen in terms of tax cuts, because the problem with that is when somebody does not have a job,
it doesn't matter that they're paying 25%.
What we need is to study what other countries are doing in terms of putting monetary stimulus into the economy, getting Kenyans back to work. That has to be our priority.
Why can't we do what the US has done?
We could do, but I don't think we are bold enough. I don't think for me, I think there's a historical part. Monetary policy, I don't think it's well developed in Africa. Because even when Ben Bernanke was rolling out QE in 2013, it was a novel thing, even for the United States market. But for me, we need to invest more research into monetary policy.
Okay.
We need to have what is called the Phillips curve in terms of, our central bank just looks at inflation. But a good economy should look at inflation and unemployment.
Yes.
Because those two...
But that data is also not quite clear.
That's another thing. So we
Okay.
need to go deep in building the statistics. And yes, I know we have a change in leadership at the Bureau of Statistics, but we need to start appreciating this economy in the sense that it can be a first world economy in our lifetimes if we invest.
I like that keyword, in our lifetime.
Yeah,
Okay, let me bring you back to now. We are paying 58% of our revenues into tax. What does that possibly look like over the next 1 or 2 years, especially in light of BBI and presidential election that's up and coming?
Well, I think it's going to be tough because, first of all, COVID has robbed the government of a lot of tax revenue. So definitely it's going to be a strain. I expect a strain in terms of payments to suppliers, which is still a big issue, allocations to education and healthcare. So the conversation on social media, especially when you talk about BBI, has been, if it's been difficult to get 15% out there,
yes,
how much more difficult will 35% be? So for me,
And this is the allocation to the counties.
Exactly,
okay.
Exactly. So for me, the fact that we've not really unpacked this cake that we've baked called Project Kenya. So, but we're expecting a lot more revenue out of it. For me, that worries me a lot because it is not telling us, are we going to support businesses and those businesses will pay more taxes? I'm not seeing that sort of conversation. So where will that money come in from? Will it be more borrowing or will it be more debt? I believe the sustainable way has to be in getting businesses to really thrive and pay enough taxes to meet our bill. But that thinking for me is not apparent in the documents that I've read. So I think for me, I expect to see more fiscal tightening. I expect to be the IMF and the World Bank to be, because there's the issue of the debt reliefs which has been Kenya has sort of like wavered a bit on it. Do we accept the debt reliefs or do we...
Where's Kenya wavering on this? What do you think is really...
Yeah, so we have a big chunk of our debt is in private external creditors.
Okay.
So this is the Eurobond and China. And the Eurobond specifically has a clause that says anytime you take a break from making your payments, forget the reason, whether it's a waiver, whether it's whatever reason is,
yes,
it is deemed that you have defaulted.
Okay, and
any types of your external, not just the Eurobond, if you miss a payment on your external debt.
So that's the Eurobond and syndicated loans mostly?
Exactly.
Okay.
So if it appears that you have missed a payment on your external debt, the Eurobond interprets it, the bondholders will interpret it that you've defaulted, and that will trigger a clause where you must pay $6 billion upfront.
Okay, that's a lot of money.
Right. The IMF, they have promised Kenya that that will not happen. They will manage the situation, but it's not very clear. So it's not clear where the Treasury sits, because the media reports have given conflicting reports, especially after the G8 summit in Saudi Arabia.
Yes.
There was a lot of conflicting. Some media reports said Kenya has accepted to take that debt relief. Others say that Kenya is still thinking about its options. So it's still very unclear, and it's back to the business journalists to really go and really get the position on that, because it's a very important
challenge accepted.
Yeah.
Okay. So it feels like there will be a consequence to that. I'm just looking at it as Mbithe has a facility with a bank, and she just cannot make good her facility. At some point, you have to bite the bullet and go and incur the cost of that restructuring, wherever you find that money, but you just can't take it, as it were. So in as much as we are doing what we're sort of dilly-dallying, it does sound that you are in an economy where you're paying 58% of your revenues. You had a budget of 3.2 trillion. That's how much you wanted to expend. You might collect 1.6, highly unlikely, possibly 1.4, 1.3 trillion. So you're left with a gaping hole that you must finance, and you can't finance that entire hole locally. And for you to go outside, you have to be able to refinance it. And the only way to refinance it is if possibly you accept this waiver. It feels like you're in a tight spot if you're in the Ministry of Finance.
It's a very tight spot, and that's the spot that Zambia was in only a few months ago. I think one of the key things that will come up is we'll see a KRA that's more aggressive, leveraging more on digitization. So you might see a digitization of the Kenyan economy, not because of the opportunities of the new economy, but from a revenue generation perspective.
Like I can see what's happening here.
Exactly. And you might see more aggressive KRA. You know, there's that discussion of KRA looking into your M-Pesa, KRA looking into your land, your rentals, and your Kenya Power accounts. So you're seeing a much more aggressive KRA, and I expect that to happen. And that obviously will lead to that digitization that we're expecting, which could have the spillover benefits to the business. But yeah, it places the direction that Kenya goes, because a big chunk of our debt is with the private lenders, so the Chinas, the Eurobonds. So I don't know the direction the Treasury Secretary will opt to go.
Okay.
It's almost as if we feel we are between a rock and a hard place.
Yes.
But I think in the next couple of days we should know.
All right, now let's come back now in terms of looking at the investment case, because again, largely because of this debt situation in Kenya, today the 1 year is giving you 8%. It makes sense as a domestic investor to invest in government treasury bills or treasury bonds. Actually, treasury bonds are giving you a much better return because the government has a huge appetite, and it has also increased the ceiling in terms of its local debt. This has now moved up closer to 600 billion, which is what they expect to get from the local market, and about 400 trillion, which is what they expect to get from the foreign markets. What does this say about the outlook of interest rates? And I ask that because here on markets today, we're always looking at the NSC, trying to see are there opportunities outside of the NSC in the financial markets in Kenya that make sense. And the more you keep looking at it, you're like, okay, it sounds like there's a crisis looming. But as an investor, it sounds like, okay, come, I'm waiting for this because I'll get a good return. How do you look at that, at least for the next 12 to 18 months?
Well, I think we need to rethink our investment strategies. And I spend a lot of time with fund managers, really thinking about it. If you think of the pension funds, almost 2/3 of our pension money is going into government security and property and land, real estate. All these buildings are owned by some property fund. The problem with that is it is anchored on the idea that government is risk-free, which is taught in economics textbooks. But when you've seen where Zambia has gone,
Exactly.
defaulting by governments, it's not an impossible situation. In fact, right now, a lot of banks are spending time to understand if any of these African countries are about to follow Zambia. So I think that...
Actually, are there any African countries about to follow Zambia?
Very, very many. Very
Such
many.
as?
Let me not get into that
Okay,
right now.
fair enough.
But our commentators have pointed out to about 40% of sub-Saharan African countries had a debt strain before COVID.
Okay.
So now COVID has just
exacerbated it. Okay.
pushed it to another level.
But is Kenya part of that? Or even from your own analysis, is Kenya possibly going to follow the Zambia route?
Well, again, it depends on what we just talked about with the conversations between the IMF, the World Bank.
So it's a wait and see.
And the private creditors, how that plays out. But the fact that you have that, for me, I always really, pension fund managers asking themselves, should we be buying more government securities? Is it time that we called out this risk-free notion
Exactly.
and say that there is a risk and is it time that we put money into where enterprise is, which is the capital markets, which is in private equity? We know we've had a very conservative investment framework in this country. We don't see enough money going to startups in the stock market. We don't even see IPOs listing in the stock markets. Compare that to bigger economies. The American economy in one quarter has 44 IPOs. 44. So
over 6,000 companies that are listed.
Exactly.
It's
so
huge.
even if you are to control for their size
Yes.
and say Kenya is a smaller country,
maybe we should have at least 2
exactly
in a year, 3 in a year.
But the stock market still, it doesn't, the strategy, yes, they have the Ibuka strategy that has come up, which I think is fantastic, but still with that, if you look at private equity, how much money is going into private equity? Still very, very little. So a lot of our investment strategy it's quite lazy,
okay,
if you think about it, and it's really
it's
on
a sure bet.
security.
You just don't want to lose money because
well, it's not so sure
on
when
the
you talk
flip
about
side,
now where the country is in terms of...
on the flip side, from 2014, NSC has been losing year in, year out. Year in, year out. So I'm imagining if I'm, and I'm just playing devil's advocate, if I'm a pension fund, do I want to be losing 10, 12% year in, year out, or do I want to earn 12% sure return from the government and probably be less speculative?
No, it is a good point, but for me, I think it's time that the financial sector came together and really had a conversation on where do we want this country to go. When you talk about wealth and prosperity, in most countries, it's through the stock market.
Yes, it is.
When you can't talk about the American economy without talking about the stock market.
So we need to have Mentoria coming into the... So when is Mentoria been listed?
That is where we need to be pushed at.
Exactly.
But even when you talk about our capital markets, most of the listings, it's really privatization of state assets. It's not really asking yourself, where is the next Facebook that's going to list a big IPO? Facebook went from being a dorm room project to the largest IPO in 8 years. We don't ask ourselves, when are these small startups going to be the next big IPOs? So we are just looking in terms of who's going to privatize soon, and each privatization has its own IPOs. So it's a very lazy strategy still again. So for me, it's not really advising pension fund managers to allocate their funds into these asset classes, but really asking, is it sustainable for us to constantly be putting all this money into government securities, then at the evening be the ones complaining about government debt? You can't have your cake and eat it.
Exactly. Okay, fair enough. So that's the thing about debt. What about, do you have a sense of your outlook on generally currency, especially? Because currency has been a bit of a touchy point, and just given the overview you've given us, the majority of the bulk of the debt and the bulk of the debt payments are actually in hard currency. Yes, we do have diaspora inflows and inflows from exports, but what does this mean for the currency? And also, in light of the fact that IMF again and the World Bank are already in conversations with Kenya with the possibility of a credit line being extended to the country come January. How do we then look at currency?
I've always said the issue of currency needs to be negotiated.
Okay.
It's not a hard science. Yes, the IMF have what is called the light mechanism of tracking currencies, and for them they think our currency is overvalued. The CBK obviously looks at our debt structures and says, if we see the currency sliding, then our debt is going to be much worse.
Yes.
Moving out. So I think there is room for some negotiation between the two, and we need to get a currency that allows trade to happen. I think for a lot of people have this opinion that if the depreciation of the currency is necessarily a bad thing because it introduces imported inflation.
Yes.
But for me, I keep saying if it gets to the optimal point where transactions are maximized, then that is a much better place to be, because if you have an overvalued currency, your goods become very expensive. Your exports to other countries become very little because people say that country is very expensive. So for me, it's just allowing the currency to naturally find, and I think that's what the CBK have said, they want it to find its equilibrium rate. I think what they worry about is about the speed
that it gets there.
does. You don't want it to go
And
overnight.
markets don't like uncertainty.
Exactly.
I mean, you're already dealing with a health crisis and a global crisis. You really don't want to be not sure about whether to hold dollars or not to hold dollars. So then do you see it weakening again from 109?
I mean, obviously, if you look at our trade balance, our trade data, we are still a net importer. We are still really at the mercy of global forces. So I'm still bearish
Yes.
on that. But I keep saying it's not necessarily a bad thing.
Okay.
I mean, China, on the other hand, really tries to fight the other direction. There are complaints that they try to weaken the currency.
Yes,
you know,
that's true.
because if you really want to be an export-oriented country, which is where Kenya needs to be, then your currency has to be favorable to the exporting community. So I think for me is the fact is we want to prepare Kenya to start being a net exporter. And the characteristic of a net exporter is you have a currency that's highly market-driven.
Okay.
So it's not overvalued or undervalued, but it's market-driven.
It reflects the sentiments in the market. So, I mean, in short, would you be holding dollar assets today, or would you invest in Kenya, in local domestic currency?
I mean, it has to be you have to obviously have a diversified portfolio.
Okay.
Obviously, if you look at the events that's happening in the US side, in terms of the administration, Biden and Trump, still a lot of lack of clarity there, but I still expect to see a stronger dollar as we march. So definitely somebody who's holding dollars for now will still, in my opinion, still benefit.
Okay, fantastic. Now let's finish up this conversation. We've talked about debt, we've talked about currency, and I know you've also been talking about the need for reforms on the NSE, especially when you're talking about capital. So as it were, when you look at the NSE today, is it a place where you can say there's, you would advise clients to put their money? What things need to change so that we're able to, in effect, get to a point where Mentoria can easily go to the NSE and attract the kind of capital that it needs to grow?
Indeed, so many reforms need to happen.
Okay, I'll probably take two. We're almost running out of time. I can see how your eyes are lit up.
In that space, I mean, you just have to think of the glory days of 2008, 2009. It was such a busy period.
Yes.
You know, when the Safaricom IPO was there.
Before that, Kengen, that's actually when I joined the market.
Kengen. It was a very exciting time to
Yes.
be an investment banker. And for ordinary Kenyans, they saw, finally, this is what other countries feel in terms of being prosperous. So there was a whole 3-4 years, and it just went silent
And
for a whole
nothing.
decade.
Yes.
Fine, you have your deacons there, but that was really not there. You have a whole decade of no major IPO, and that's not considered a crisis. So for me, there are fundamental things. First, it's a strategy thing. The strategy of waiting for state assets to privatize, that's the wrong strategy. If they do choose to privatize, that should be a bonus or a by the way, but it cannot be your core strategy. Your core strategy has to ask yourself, all these startups that are doing business in the Nairobi garage, in Ikigai, how can we get them in the next 10 years to be the big IPOs? That's what's happening in China and in the US. Number two, we need to remove conflict of interest. We need to go very heavy on insider trading. You know, in Kenya, if you commit insider trading, your trading license is suspended. But in countries like in the US, you get 7 years hard time in jail. So we are still very, very soft on insider trading.
So does that have an element to do, possibly the element of conflict of interest? Because even the trading platform, NSE, its ownership is also partly owned by the stockbrokers who then sit on the board and sort of now determine the vision and the strategy execution for the NSE?
Indeed, well, there are two parts of it. There's a whole topic of demutualization,
Okay.
which has its pros and cons.
Okay.
But the idea that indeed that you can have a conflict of interest,
Yes.
that in the morning you are representing a company that's listed, in the evening you're representing the board that's listing the company. That in itself, even if you're not doing anything wrong, kills investor confidence. And that's the reason only maybe 80% of our trading is on 5 stocks.
Yes.
Because people just don't know. And for me, I think even that affects the valuation of companies on the stock exchange. So for me, we need to remove that conflict of interest. Things around insider trading cannot be things that we talk about trading licenses. It has to be serious. With
Consequences.
Very serious consequences.
What about the cost of trading? Because that has been touted as a deterrent, at least for the retail investors, because the structure of the market favors institutions. Institutions pay possibly a fifth of the cost that the retail investors pay.
Well, that is important, but I think even there's an information asymmetry. Because when I train people or talk to people about investing in the stock markets, first of all, there's a knowledge gap. People don't even know. They rarely say that the cost is expensive.
Yes.
They don't even know where to start from.
Oh, wow.
So it's important there is that knowledge sort of like transmission towards, how do you get a company that Kenyans really identify with in terms of starting, and how do you see it nurturing, growing, become an IPO? I don't think we have that classic story. And I think when we get that first classic story, I think you'll see a lot more interest in people saying, oh, wow, that started as a startup. And
now
look at where it is now. We don't have that, and that's what other countries have. So it's very easy to translate the stock market to wealth. In Kenya, it's still something considered to be an old boys club. It's for a few.
Yes,
and
the affluent. It's sort of, okay, fair enough. So we've talked about debt, we've talked about currency, we've also talked about the NSE. We've come to the tail end of this conversation, and I would like you perhaps to just give us a sum. So what's your parting shot? The key topic for today was debt. Is it a concern? But I'd like to twist that and ask you, as an economist, you're always comparing the investment case not for assets only, but for countries. When you look at Africa today, is Kenya in a good space? Is it in a bad space? Would you be telling people, put your money here, but, or possibly hold on to cash? What would be your parting shot be in relation to that?
Kenya is a very promising economy. Number one, it has a very young population. Our median age is 19 years. And number two, we are very diversified. So we are not, unlike Nigeria, maybe dependent on oil, or South Africa, gold, or Zambia, copper. Kenya is a very diversified economy. So even if tourism is not doing well, as it was affected by Al-Shabaab, we find other sectors propping up. So that makes Kenya a very, very attractive place. But even the economics, the feel of staying in Kenya is still very, very positive in terms of people want to do real estate. People want to think of their lifetimes in Kenya. And we have a good education sector that is propping up. Just reading the article of the world's most traveled man with the record of going to 139 countries. And he says Kenya is his favorite country.
Wow.
So for me, we have huge, if you think about the weather, if you think about the people, the warm people, the culture, Kenya should almost be a first world country. The fact that we are not should give us so much urgency to undergo reforms, not just the BBI, what they're talking about in the BBI, but real reforms that can transform the wealth and prosperity for Kenyans. I think Kenya really can take on South Africa. It can take on Nigeria. So I think it's a great place to be.
What's the one reform that you would push? Because I want us to get over and above just talking, but in terms of action, what would be the one thing that you would change in terms of reforms? And secondly, what's the one thing that you are doing as a mentoria economics to just be able to change that narrative in your personal capacity?
No, I like that question. I think the big thing is we need to make our economy more market oriented. We need to take companies, when I think about Kenya Power right now, they're in such a difficult situation because they are being affected by the government of the day in terms of pricing, but they have to report to you in terms of commercial citizens. So for me, I think we need to take this country in towards a market-driven economy where every prices are set on a market trajectory. My take as a mentoria, as an economist, is helping people build business models that are vibrant, business models that can bring cash flow. When I think of places like Masai Mara, Masai Mara can bring in so much more revenue than Kruger, but we've not packaged it in a way that it comes. So for me, it's to help these organizations not just navigate the new economy, but build business models that are sustainable, business models that will bring cash flow, and business models that will bring prosperity.
Okay. Thank you so much. I can already see you as the government spokesman when it comes to the strategy and the economic outlook. That was Mr. Ken Gashina, who is an economist at Materia Economics. And he was talking to us about the possibility of a looming debt crisis. What does this mean for Kenya as a country, and are there investment opportunities? This is not a conversation that you can actually complete in one sitting. It's an evolving conversation. But some of the risk factors, we are spending 58% of our revenue paying debt. The majority of this debt is foreign debt that could possibly have an impact on currency, and there could be a bit more weakness there. The other thing that I have heard him say, which actually touched enough with me, was the question, are we actually spending on the right kind of infrastructure? There is an emerging new economy. Are we still held up on papers and fiscal stimulus packages that are looking at Kenya 50 years ago as opposed to looking at Kenya 50 years to come? And the best thing that I've heard, which was in his parting shot, was the fact that in as much as we are focusing on politics, you and I have a responsibility to use the spaces that we are in to actually emerge and come up and request and require an urgency in terms of reforms, depending on whatever sector of the economy that you are sitting in. And over and above that, as an individual, rather than complaining, what is your contribution to building the kind of Kenya that you want to see? So if nothing else, at least we've been able to tell you some of the investment opportunities, but I hope we have left you with a question mark and hope that you can do something so that we can be able to enhance the value of us as a people of this country, if not of this nation. That's all we had for you today. Thank you so much for your time. See you tomorrow, same time. Good afternoon.